While the so-called FANG stocks, plus the likes of Tesla and Microsoft, have been the bells of the stock ball this year, powering up the Nasdaq's nearly unbreakable run this year, up 26%, would be the biotech names, playing an increasingly powerful role on the Nasdaq, particularly during the pandemic. 592 biotechs and pharmaceutical names, including Pfizer's COVID vaccine power player partner BioNTech, trade on the Nasdaq. I mean, you could throw Moderna in there, Gilead. They're all very much at the forefront of the COVID race. Nasdaq's performance has levitated the stock of its parent company, which reported stellar earnings before the bell this morning. Nasdaq CEO Adena Friedman joins us live right now to talk about all of this and more. Welcome back to the show, Adena, and congratulations on beating estimates by a long shot on both the top and bottom line. Yes, megatech has captured investors' hearts, but to me, a perhaps bigger story for you right now is all the biotechs that we just mentioned that trade on the Nasdaq during this pandemic. So I need you to tell us how that story has been developing for you.
Sure. Well, Liz, it's great to be here, so thank you very much. And we are really proud to be the home to biotech in the United States. I think that we have 592 biotech and pharma companies. We also have the Nasdaq Biotech Index, which has almost $15 billion of assets under management tied to it. And we continue to be the place where a lot of biotechs turn to in terms of supporting them as they're looking for investors and managing their lives as a public company. So we're really, really proud of our role in the U.S. economy when it comes to the biotech industry.
Well, yeah, I mean, it's fascinating. They may be down today, but the run-up has been very impressive, and we're all waiting for that trajectory that we know will come when the vaccine is created. But let's get to the incredible performance of the technology sector. What do you think is at the core behind its domination at a time where huge question marks hang over the actual American economy?
Well, I think the first thing is it's biotechs and technology companies. If you think about what is going to carry us through the pandemic and which companies are really going to drive the economy on the back of the pandemic. And I think you really end up leaning into technology companies that are geared towards, consumers and making sure that they have convenience, that they went from a nice to have to a need to have. And then obviously a global workforce and a diversified workforce is really where a lot of other really large and successful technologies really focus their energy. And then, of course, you have a healthcare and the biotech industry. So all of those elements of the economy are really powering us through this pandemic. And I think investors are recognizing that, not only in terms of the current period of time, but what will the world look like afterwards. And I think that's why investors are really coming in and having confidence in those investments.
Yeah, although we've talked about this a lot on the show, this bifurcation, this split between the economy and the stock market. Economy doesn't look great. The stock market looks wonderful, but the macro picture for stocks could have been much worse if it hadn't been for the Federal Reserve's quick response. But in just the last hour, I was watching Goldman Sachs CEO David Solomon. He was the lead guest at the Economic Club of New York Zoom event I was invited to. And this particular comment he made jumped out at me. I want you to listen in because I thought it was apropos to this discussion.
Great.
Rates are zero. There's a conviction that rates are going to be zero for some time. There's a conviction for more monetary and fiscal stimulus, and that's obviously bolstering asset prices.
Yeah,
so asset
I would have
prices
to say
for FANGs plus Tesla. Yeah, go ahead. Go ahead.
I mean, I would have to say I fully agree with David's comments that there are really three elements of what is really bringing investors into the equities markets. The first is this fiscal and monetary stimulus, and I also agree with him that it's not over. I think there will continue to be more stimulus, which is really creating a very low cost of capital and also creating liquidity in the markets. And I think that those two things combined give investors more confidence to come into the markets. Then we, of course, have the overall trends I just mentioned in terms of which sectors are really driving the performance of the markets. And those are the newer economy sectors like tech and biotech, other healthcare, as well as other industries that really lean into the fact that going forward, we're going to have a different economy. We're going to have a more technology-driven economy, a more remote economy, a more flexible economy. And I think all of the companies that lean into that are doing quite well. And then the third thing is, of course, what are the alternatives? Yeah. There's a lot of money to put to work. There are a lot of investors with a lot of cash, and they are looking to make investments that will generate a return. And with the zero rate environment, you really do have a situation where the alternatives aren't nearly as attractive. And so they're putting their risk capital into the equity market.
Yeah, risk capital and the R word. You know, when you look at the FANGs and all those names plus Tesla, Microsoft, I always like to add that. By the way, both of those names are reporting after the bell right here on Fox Business. We'll have that. But they represent a huge percentage of the Nasdaq's value. That plus the Federal Reserve, Adena, you know, people feel that could create a certain distortion. Is there some way to tweak how the index is weighted to maybe balance those distortions out? Have you thought about that? Is that something you don't need to do, or you at least consider it?
Well, we have actually done some of that in the past in terms of making sure that the mega cap companies don't become the entire index. But the fact of the matter is those companies are the ones that are growing. They're generating enormous amounts of revenue and earnings. They're driving the economy forward, and therefore they become a bigger weight. That's a natural part of things. If you think about what our economy looked like back in the 60s and 70s, they were really driven by oil companies. And so there are phases in the economy over periods of decades where you see way back in the day, you had the railroads, and then you had capital intensive companies really dominating the markets. And then you had the oil companies really coming in and becoming dominant in the markets. And now you have technology that really has become the dominant driver of economic growth. And I think for that reason, they are sitting at the top, and they are as large as they are for good reason.
They've captured people's attention, particularly novice investors. They've flooded to this online trading platform, Robinhood. That's a favorite of millennials who tend to invest maybe based more on trends versus fundamentals. Have you and the Nasdaq considered making a play for Robinhood?
Well, Robinhood is actually a great client to us. They obviously are a very important part of the ecosystem today, as are the other retail brokers as well. So TD Ameritrade, E-Trade, Schwab, IBKR, they're all experiencing a growth in retail investors, and they are important clients to us in terms of our trading business. But also we provide them, empower them with free, essentially real-time information that allows the investors to have a great experience on their platform. So I see them certainly as clients more and partner clients, but clients nonetheless.
The IPO picture is way better than anticipated, even during social distancing and lockdowns. You guys had 87 IPOs in this year of the pandemic. We can put some of them on the screen. Warner Music, Zoom Info. There were some really impressive performances here. What is it about how you've presented the opportunity to companies that has drawn them in to go public, A, during a very unsure time, and B, everybody wants that moment where they get to press the button and we have all of the excitement about it. When do you expect you'll have the next in-person, what will it take to have an in-person experience for an IPO next time?
Well, I think, first of all, I'm extremely proud of the team because we went from being in the office to being at home in a period of a week. And then on top of that, we then needed to make sure that we continue to support our clients in a seamless way. And that's whether they're our technology clients, our issuer clients, our broker-dealer clients. But in terms of the IPOs, what really I think that we were a bit surprised by is how quickly the IPO market did recover on the back of the really challenging days we saw in March. But once companies realized there is a lot of capital to put to work, investors are looking to create opportunities for themselves in the markets. And the companies that came out during that period were biotech companies, technology companies, ones that really were leaning into the trends that people were seeing during the pandemic. So they were able to find those investors. And then you had to do an online roadshow and an online IPO. And so we were able seamlessly to create our IPO experience online. And that has really changed the IPO experience. The roadshows are shorter, they're more condensed and more intense. But at the same time, we're able then, therefore, to bring IPOs to market more days of the week. And at the same time, I think that, of course, the CEOs and the senior executive teams do want to be able to come back here and do their IPOs in person. But first and foremost, they want to keep themselves and their families and their colleagues safe. So being able to have a virtual IPO experience has been very important. I don't really know when we will have the first in-person IPO again. But in the meantime, we are very successful in working with our customers and being flexible about how they want to manage that great moment for themselves.
Yeah, it is a great moment. I've done that ringing of the pressing a button at the Nasdaq. It is so much fun. Gives you chills. I do want to ask you about the situation with China. You guys were pretty active and out in front when it came to the Chinese company Luckin, which got into some real trouble in the past. And so you actually got them delisted from the Nasdaq. Now the U.S. is going after other Chinese firms that are not on the up and up, they say, and may kick some of them off the exchanges if they don't adhere to U.S. rules. How closely are you looking at that situation, considering many of them do list on the Nasdaq?
Well, first of all, they are compliant with the rules. I think that the issue is, do we have rules that really promote as the transparency that we would expect of companies that come and list in the United States? And so the rules exist and they operate within the rules. But what we're proposing is to continue to enhance and improve those rules, to improve the disclosures that the companies coming from countries like China have to experience when they come to the U.S. markets. And they come in two different areas. One is, how much oversight does the SEC have on the accounting firms that are overseeing the financials of these companies? And then secondly, what are the disclosure obligations that Chinese companies have versus companies from other countries? And that really is the role of the SEC. So we did ask the SEC to convene a roundtable of experts looking at the underwriters, the accounting firms, the lawyers, as well as the exchanges, and the whole ecosystem that surrounds the decision of bringing a company to the U.S. And I think that roundtable really did lay bare to the fact that there are some issues that the SEC has to address, and it really will require diplomacy with China to try to address them. But we also took it upon ourselves to make some improvements in our own rules in terms of having more oversight over the quality of the accounting firms, requiring that members of the management team or their consultants have experience in the U.S. markets, and increasing the public float requirement for companies coming to the U.S. So we can play a role, but the SEC plays a much bigger one, and we were encouraged that they did convene the roundtable to discuss this.
Well, it is a work in progress, and it's suddenly heated up over the past couple of hours or days. Adena, great to have you on. We'd love to have you back. It's such a great story, and your leadership has been platinum, definitely. Adena Friedman,
Thank you.
CEO of the Nasdaq. We'll see you next time.
Thanks so much, Liz.